startup is going to fail, definitely is going to depend upon the mindset of the founder. To build that strong mindset, it will take some amount of time. It's not like investing in stocks or like in gold or like silver in other places. They very well know investing in startups may work or may not work, may come in 10 times more than that, or I'm going to lose that money as well. So most of the VCs and investors are very much aware of it. Who want to build a stronger brand, want to build their customer base, they will implement. But they are like சும்மா லெதர் செக் இந்த மைண்ட் செட் அப்படின்னா they won't be implementing. நீ என்ன சொல்றது நான் எனக்கு கேட்கறது. From that we will get an analysis. Okay, this founder is not ready to change, is not ready to pivot. So my suggestion advice would be to build that strong mindset.
Hi, I'm back with Mr. Nithin Alexander. He spoke about the power of networking in the previous episode for everybody who had watched it. I'm going to well further and get him to talk to and share with us some interesting nuggets that can be useful for each of us who are on this path of entrepreneurship. What is the need that you're fulfilling for entrepreneurs through this ecosystem? Can I say that while you are helping entrepreneurs find funding and everything, would it be fair of me to say that you're also curating a really good set of investable startups because you are doing a background check, you're doing possibly a money flow check while you are evaluating the business idea? Would you be the right person for investors to also reach out to folio investment portfolio?
Thing that we are trying to build is, especially with entrepreneurs and Madras, we want to build a lot of global brands from South India. So that's a core mission for UIM Club. But in order for me to do that, the major problem our founders from our ecosystem that they are facing right now is lack of access. Access to capital, access to resources, access to network, access to mentors, access to people and will be investing in their startups. So mainly these are the main problems that our product founders are going through is from South Indian market. All the founders from Bangalore, Bombay, they have very good network, they have very good connections, they have very good alumni networks. A lot of interesting communities are helping them to scale their business, connect them with the right person. But when it comes to South India, especially in Tamil Nadu market, we are actually catching up right now. We are right now in the very good phase, to be very honest. Many interesting people are coming inside. For example, to share you one of the major insight, Fireside Ventures, India's one of the largest venture capital company. They've invested in boat, Mama, all the major D2C players, consumer brand founders. And we are the first community to bring them to Chennai market. We hosted Mr. Kannan Sitaram sir, who was a co-founder of Fireside Ventures. And when he came to Chennai and when he met all these D2C founders, we curated all the founders only for D2C founders. We brought all the major players. We had a small room, closed room pitching session as well. And we had a fireside chat session with him. Suppose even Mr. Kannan sir told me, Nathan, I didn't realize that there are many D2C founders, consumer founders from Chennai market. This is something we want to explore. So Fireside Ventures as a VC company have invested in only one brand from Chennai market, which is called a Sweet Carbon Coffee. That's the only one brand that they have invested, and they don't have any other portfolio in Tamil Nadu market. And currently, they want to explore after seeing all these happenings, which is through our community events. Now they're very keen on exploring what other options that they are having right now to for them to invest in Tamil Nadu-based founders. So that's a major insight for us, to be very honest. Because of them coming to our Chennai market, a lot of other VCs also very much keen to bring to come to Chennai market to explore what future startups that they can find. One interesting part for being a member of UIM is we do monthly meetups. As you rightly said, we do when joining Entrepreneurs in Madras, it requires three different process. First thing, they have to fill an application form where they have to fill all the major details about their business. My team will vet all the questions that they are answered. Second, once they have been vetted, we'll hop on a phone call with them to understand their mindset, to understand what they're building, so to understand the type of business that they're planning to build and scale. And the third process will be in-person meetup. So we certain founders, if we feel that they require a in-person meetup, we go and meet them in person, understand their setup, understand what they are building, and if all the tick boxes have been taken means, only then they'll be able to be part of the entrepreneur summit. So what insight that we are able to gather from this is we are doing a pre-due diligence process. This is something an investor For them to do, it will take more amount of time, but we are doing this. This is first thing that we are doing. Second major thing that we are doing is by hosting our monthly meetup. So we encourage our month founders who are part of our ecosystem to come and join this monthly meetup, not only for them to network, not only for them to learn and meet and new get exposed to different ideas, but personally for us also to understand more about the founders mindset, the type of brands they're building, the type of insights they're able to share. For example, if a XYZ founder is coming to one meetup, they're gaining some insight. We are sharing certain insights about their industry and how they can implement and grow. We will be watching them closely, whether they're implementing what other founders have told, what we have said to them, and everything. We follow them on Instagram, LinkedIn, and we make sure whether they're implementing them or not. If the founder is like truly want to build a stronger brand, want to build their customer base, they will implement. But they are like சும்மா லெதார்ச்சிக் இந்த மைண்ட் செட் அப்படின்னா they won't be implementing. நீ என்ன சொல்றது நான் என்ன கேட்கறது அந்த மைண்ட் செட்டில் இருந்தாங்க அப்படின்னா they won't be implementing what we have told, the strategies that we have spoken. From that we will get an analysis. Okay, this founder is not ready to change, is not ready to pivot. But this particular founder is ready to change, is ready to pivot, is he or she is listening. And they are trying to build something, they are implementing and they are experimenting. This particular traits is very interesting for a investor for them to come and invest. So these are the certain data points that we are able to understand by hosting all this monthly meetups, by having a pre-due diligence application process. We are able to gather a lot of insights about each and every brand, each and every industry, and especially about the founder mindset. And this is something for an investor, this is a for them to do all this process, it will take months of time. We are able to do that through our community. Because of our network, we are able to do all these initiatives. So that's why we feel investors are gonna finding Chennai market and Tamil Nadu market for them to invest in the next 2 to 4 years. You will see a lot of brands getting invested, getting funded, getting strategic partnership with like celebrities from our ecosystem. This is going to happen in another 2 to 4 years. This change is going to happen. They are already Bombay market, Bangalore market. They have explored all the different markets, but South India has been untapped for a lot of VCs and investors because of language barriers, a lot of different things. That is something we are acting as a bridge right now. UIM as a community, we are acting as a bridge. And we have a company called Van Ventures, which is a private limited company. It's a community-backed venture building studio. We have 4 different partners in it. What we do in that particular company is we identify startups, we identify founders who are building something incredibly great, lacking certain resources, lacking certain access to capital. So that is something we are trying to bridge a particular gap through our Van Venture Building Studio model, by connecting the investors, and by connecting the investors by making the warm introductions, closed room pitching sessions. We are representing these brands to the VCs, saying that, boss, we have so many people, very good startups in our ecosystem. Why don't you come and have a look at it? These are the 10 startups that we have done the due diligence process. Come and take a look at it and let us know what your thoughts and insights. It will take a lot amount of time for them also to understand everything. So this is an ongoing process which is happening as we speak right now. So that is something to answer your question. Yes, we are doing that. Yeah.
Spoke about the flexibility of an entrepreneur. On that note, in your experience, Nithin, why does an entrepreneurial venture fail rather?
It all depends upon the founder. That's why when I said, while onboarding all these people to the club itself, we make sure that mindset actually plays a major role. If the founder mindset is quite flexible, they are willing to learn new things, or like they are like listening to different ideas and strategies, which means they have an higher potential for them to make their startup work, or make their startup to scale and build and take it to next level. But if the founder mindset is something like, all the bad things are happening to me, when they wake up itself, they'll be like very less excited. They'll be like, oh, today I have to go to office, today I have to do all this. Already founder's life is very challenging. It's a firefighter job. You have to fight different, put all the fires in different places: hiring, process, operations, product, packaging, distribution, retail. You have to manage all this stuff. A startup is going to fail. Definitely is going to depend upon the mindset of the founder. So my suggestion, advice would be to build that strong mindset. It will take some amount of time. Even I'm in the learning process. It will take some amount of time, but the common practices that I'm noticing is the mindset. Second thing is, most of the startups, what they do is, Rashmi, once they get funded, think that they have achieved something. You're getting funded, you're responsible for the investors' money. You have to make sure that money is utilized in the right way. But I'm seeing most of the founders in the ecosystem, once they get funded, they celebrate, put a party, throw a lavish party.
So the end game of the startup is the funding, not the larger picture.
Most of the founders are getting fogged by this funding because media also plays a major role, saying that this so and so brand has got funding. This so and so, yes, funding is necessary. It's very essential for the growth of the business, but the fund has to be utilized in such a way that whatever you are able to achieve in 10 years with this funds, you should be able to achieve in that 2 to 5 years span of time. So that is how the investor also looks. That is how the founder also have to operate. But most of the founders, once they get funding or once they get a strategic partnership with certain celebrities or HNIs, they feel that they have like achieved all the things, and they fail to do the one most important part of the business, which is like operations, sales, team building, managing the finances. They miss the longer vision. They focus on the shorter term. Okay, I got like so and so celebrity who is like part of the brand. I got like say 50 crore funding. I got like 100 crore funding. They lose a longer term vision. It has become like a badge of honor. If I get funded, which means I'm gonna get invited to all the events. I'm gonna get featured in all the newspapers. I'm gonna get featured in all the TV shows and podcasts. That has become like a badge of honor. End of the day, I believe a startup definitely they need certain support in terms of funding and access and capital. But my 2 cents would be, if possible, do it bootstrapped. If you're able to run your business bootstrap, definitely do that. Only raise money if you see that your startup has a potential for a growth expansion process. You can raise funds for expansion, for a growth. For example, if you're having 5 retail stores and you want to expand it to 50 retail stores. Recently, Chai Kings raised funding from AVT Premium Tea Group. $2 million they raised the funds, and they're using that fund too for the expansion process. So when you're going for a funding, you need to have a clear cut plan as well. This is the fund. I need so and so amount of money for so and so process, expansion process. I need to go to global countries. If that is the vision, definitely you can do that. But if you're going to raise fund just because I'm going to have a badge of honor, I've got funded, I'm going to get invited, I'm going to feel like a celebrity, that is a wrong mindset for founder.
In the last 2-3 years, there have been a lot of bankruptcies and winding down of the funded startups. Would you say that investors feel that they burned their fingers and now they're really cautious?
They are investors because they already know that their money is at risk. So startup is one of the high risk venture for them to invest. It's not like investing in stocks or like in gold or like silver in other places. They very well know investing in startups may work or may not work, but they go with their gut intuition. They go with the hope that it might gain some returns. That too after minimum 5 years of time. It will take minimum 5 years. Maximum it can go up to like 10 years, 15 years of time as well. When a proper investor, I'm saying a proper venture capitalist, a proper investor, while putting their money, they very well know that whatever the amount I'm going to put may come in 10 times more than that, or I'm going to lose that money as well. So most of the VCs and investors are very much aware of it. Only certain angel investors who are in the ecosystem, they expect certain amount of money at a shortest period of time, say like 2 years or 5 years of period of time. They would expect the return because they're all angel investors, people who came at the very early stages of the business, when you might not have an MVP product, when you might only at the idea stage. So these people come in as an angels. So that's why they call in as an angel investors. They come and give some, say like 5 lakhs or 10 lakhs or 25, 50 lakhs of amount of money for us to build an MVP or build it as a proper venture. So for that particular person, definitely at a certain period of time, we have to give them the returns. So that is a responsibility of the founder. So for them to give the returns, only two options are available. One, you have to scale the business to next level. If you're making 1 crore, say if you're able to scale it to 50 crore, then you can able to give the returns. But for unfortunately, if you're not able to do that, you're doing 1 crore of business, but after you're able to do only 2 crore or 5 crore or 7 crore, then you will be under a pressure to raise another round of funding. So that's when another serious play, VCs, venture capital institutions, they come into play. That's how the game of valuation comes into play. Lot of parameters comes, and the founder goes for another round of funding. So once you enter in the cycle of funding, Rashmi, it's like a vicious cycle. This is a quote which was given by Madhumita, who is the founder of Indus Valley. She has built a 100 crore brand in the lot of toxic cookware appliances are in the market. She has built a brand which is like very favorable to the environment. That is something everyone can use on a day-to-day basis. They even in the industry from 2016-17. So one insight the founders shared me was they've been trying to raise funds from 2016-17 until that time the ecosystem was like very scattered. They were not able to find, they were doing like 200 plus pitches, but finally they got an opportunity where they got like funded by Chennai Angels, then DSG Consumer Partners came in, then Rukam Capital. Now they are like very good, they are in a very good place. But the major insight she told me was, Nitin, once you get into funding, it's like a cycle. You have to keep on raising funds. Only when you keep on raising funds, your brand valuation will go up, then only you will be able to give exit to the previous set of investors. So either you have to do a higher number of sales volume in such a way that you are able to give an exit to your investors, or you have to raise another round of funding from external people so that you can give an exit to the previous investors who are at the cap table. So these are certain things that a founder has to keep in mind, and investor very well know that this is going to be a very high risk venture. So that's where the communities has come into play, because as you rightly said, we do all the pre due diligence process. We understand more about the founder mindset. Yes, we do understand more about the business, like unit economics, whether the industry will scale or not, but more important, whether this founder will be able to run this venture or not. End of the day, the founder is going to be the driving factor, and he's going to be the face of the company. He's going to he or she is the heart of the company as well. So we give that particular, we, since if they are able to coming to our meetups, closed room discussion, we gather a lot of insights from them. Rashmi, when you sit across a person and you have food with them, you understand a lot about that particular person. So that's what the community is as like come into play. We are able to get a lot of insight about the founders in the first place, and that insight is able to give us. We are able to share it to the investor, saying that yes, this particular founder, he or she has a particular mindset to grow the business. No, this particular founder is in the business just to make some money. They are like doing, they just want to be in the game, that's it. They're not looking to go global, or they're not looking to expand. That insight also will be able to gather from this set of meetings. So this set of insights we can give it to investors and make sure it's already a high risk venture, but we can just mitigate the risk to a little 20 to 30 percentage. That is something people like us can do that.
While running the day to day operations of a startup, if there were two or three things that you would tell a startup leader or a startup founder to be wary of running his own startup, there would be some common trends that you observe, right? Certain mistakes everybody inevitably makes in the first 5 years. What will those two or three things be which you will tell people, you know what, hey, don't do this. This will never lead to a good outcome.
Product market fit, PMF. While you are building a product, it might be a SaaS product, consumer product, whatever it is, understand more about the consumer. People are going to use your product, because I'm seeing a lot of young entrepreneurs from colleges and from upcoming institutions who are like starting their own ventures without having this product market fit. What they are doing is they believe their startup is the best idea. They have the best idea. But when we go and ask them, have you spoken to the people who are going to use your product or who are going to use your service? They'll be like, no, I haven't spoken to them. So that is a major red flag. So before launching a product or before launching your service, talk to those people who are going to use your product and service. Understand what are their pain points. Before launching UIM as a membership, I spoken to hundreds of founders, Rashmi, understanding what are your pain points. Should we launch this or not? Will you be taking the membership or not? I spoke to like hundreds of founders. Only then we launched this UIM as a subscription-based club, because we understood the pain point of the founders. Okay, this particular founders go through hiring problem, they need resources, they need access to capital. We understood the pain points. That is what we are offering in terms of the membership. This certain insights, any upcoming founder has to have the particular insight. Product market fit. If you're launching a SaaS product, go and talk to your users whether this particular service is needed or not. If you're launching a service, talk to the particular user who is going to use it, whether they are going to use a product or not, and how much are they willing to pay for it. That is, if they give like green signal, then go and launch your startup, go and launch your business. You will be able to build a solid business. This is first thing, Rashmi, PMF, product market fit. Second thing I would say is, from day one, founder has to focus on sales. That is something most of the founders, I would say, in the ecosystem, they are missing. They focus on building the brand, they focus on building the marketing channels, they burn heavily on paid marketing, paid advertising, but instead they should focus on sales from the day one, because cash flow is something very important for any survival of the business. You need to have a cash flow. Cash flow is going to make sure that either your business is going to make or break. So if you're going to keep on certain businesses, certain innovative startups, they require a lot of R&D. There is a person in my community called Niranjan who is building a startup called Symbionic. It's a robotic arm for the people who have lost their arms in certain accidents. So interesting startup, social impact startup. It got like funded and mentored by Kumar Vembu sir. Recently, they got featured on Shark Tank India. They got funding from Namita. Those particular startup, they require a lot of research and R&D work. They can use that money to burn the capital for R&D. But for example, if you are building a skincare brand, you don't have to burn a lot of money on the R&D. But yes, you should have the right formulation. Yes, you should have the right labeling and packaging. PMF is also has to be there. But from day one, you have to sell your product. You have to go and talk to people. You have to put up stalls. Yeah, there are a lot of different pop-up stalls which are happening in and around Chennai. Put up your stall space. Even if your packaging is not great, understand what people are trying to say about your product. Understand what they are, what is the insight that you're able to gather from them. Give it to them. Give it to them. In our Singapore event also, we hosted a session, place where women founders, they were able to put up stall space. In that particular, there's a founder called Aishwarya. She runs a D2C brand called as Klin, Klin. It's a plant-based
Cleaning
cleaning
solution.
solution
Yeah.
product. So she was able to give her products to a lot of people, gain a lot of insights, gather a lot of insights. She had a full-time job, but after Singapore, she got a lot of confidence. She quit her job and she's now a full-time founder right now. So you need to have a proper insights before launching a product. How you can gain that particular insight is by going and putting up a stall space, giving your product as a sample to all these early adopters, giving access, if you're a SaaS based product, giving access to say 100 different people or 10 different people for them to come and use your product and give early feedback. You need a lot of feedbacks so that you can keep on improvising. Once you feel that you have a proper product market fit, then you can go and launch. So that's a major thing that I would say, Rashmi.
Bangalore is considered to be the Silicon Valley of India. Why haven't we reached that place yet? Is there a reason? Because I don't think there's dearth of talent. What could be the reason?
As you rightly said, Bangalore has been considered as a Silicon Valley of India. I recently went for I stayed in Bangalore for a week and I explored the startup scenario in Bangalore, what is happening. I participate in a lot of events. People in Bangalore, there are like, I would say like 70% of them have like lot of young population, is there in Bangalore. I think that is one of the major advantage of Bangalore city as a whole. They are open to experimenting. We are like doing a lot of different stuff. I stayed at a place called as Draper Startup House. It's a house for entrepreneurs.
That's so amazing.
You can work, you can go there, check in, work there, you can live there, you can cook your food there, you can host your events, you can do a lot of collaborative activities inside the particular place. It's like a house for entrepreneurs. Whenever I go to Bangalore, that's a place that I'd stay, because that's when you get the ground reality, ground energy. It's a dormitory, co-living space, event place, everything. Some sort of activity will be happening at the place. So that's the vibrant, community that they have built over the years. And Chennai as a market, we are going to do that. We are in the right phase right now. So all those people are finding Chennai to be a very interesting place, because we have a lot of talents from Tier 2, Tier 3 cities, especially from Coimbatore, Madurai, Tiruchi, Dindikal. A lot of interesting people, interesting talents are building from there. And many founders are moving their base to Chennai right now. We are seeing a shift right now, which is happening. Bangalore has become overcrowded right now. I would say it's a very beautiful environment and space, but it's become overcrowded. Now all the major startup are moving, setting up their base in Chennai market. They are exploring different opportunities, because you get access to metro. You have airports over here. You have all the talent base, all the great institutions like VIT, SRM, Anna universities, MIT. All these major institutions are from Chennai, so they are able to find a lot of talents also. So I would say we are in the right phase, Rashmi, in terms of access to capital, access to resources. All the startups from Bombay, Bangalore are finding Chennai to be a hotspot right now. So that is something, yes, it's happening right now.
People who are watching, if they want to reach you, how should they reach you?
So they can reach out to me in my LinkedIn profile. It's like Nithin Alexander, or they can go to my Instagram, the Madrasi Underdog. They can DM me on Instagram, or they can mail me at CEO at vanventures.co.in. I'm very accessible. You can also have my number. It's all in the Instagram and LinkedIn itself. I have posted my number as well. It's 9710 727517. So if anyone is watching this, wants to start their own business, or wants to be part of our community events, or wants to onboard as a mentor or an advisor or a investor, definitely then they can reach out through these channels. We'll be very much happy to onboard them. Yes.
So, guys, in the description of this episode, I'm going to be sharing all the contact details of Nithin. So, please feel free to reach out to him. It's the mission of his life to be able to handhold as many startup and young entrepreneurs as he can. So, don't miss this opportunity.
Hashmi, thank you so much for having me. It was a pleasure talking to you. Again, circling back to the one of the major point that I told, our connection happened through one of our events.
Yeah.
You have we spoken to one of our events. You didn't hesitate actually. You came and spoke to me. So I think that is something has to be with any founder or any person who is like wants to go to the next level. That hesitation we have to keep it aside. If you want to go and succeed in next level, definitely we have to talk to the right people and get that opportunity and get it going. And I wish you all success for this podcast show. This has been an amazing episode. The questions were like so amazing and it was like so insightful. And once again, thank you for having me in the podcast show. Thank you.
Thanks, Nithin.
Thank you,
Thank you
Rashmi.
so much for your support.
Super. Thank you.